Hi, Roger Bryan here. Today, I want to talk about some investment tips for those that are just getting started in cryptocurrency. Here's one of the most important things to know. If you're just getting started in cryptocurrency today, don't worry. Almost everyone is new in this space. This space may have been around for a few years, but it's really only become a popular investment strategy over the last 6 to 12 months. So you're just like everybody else. And what I want to do is I want to give you 5 tips right now to help you get started on your path to investing in cryptocurrency. The first one is that you got to get started. And that's really been the biggest stumbling block for most people. They start doing research, they start looking around on Facebook or social media. They hear about all these wallets and exchanges and hacks and problems and mining and buying and trading, and they get overwhelmed, so they do nothing. And if that just overwhelmed you, I'm sorry, but I'm going to make it simple right now, I promise. In order to get started, the easiest thing for you to do is open up a Coinbase account. It's going to be very quick, very painless. You'll get verified. You'll connect your bank account or your credit card, and you are ready to buy your first coin. So now that you've got everything set up and you're ready to get started, you've got the infrastructure that you need, you want to go into step number 2, which is to start doing a little research on what coins you want to buy. Now, at the macro, you've got in Coinbase some of the biggest coins, which is not a bad place to start. That's the Bitcoins, the Ethereums, the Litecoins of the world. I would recommend going to a website like coinmarketcap.com and checking out some of the information that they have available on all of the different coins that are out there, and concentrate towards the top if you're just getting started. You'll have a similar overall risk horizon, but you're going to have better liquidity in the markets, which is a big part of success in investing, is making sure that you invest in a liquid asset. So you've got your account, you're going out, you've done some research, and I didn't say buy yet. You're just at that point where you're almost ready to. Really, what I want you to do now that you have the ability to buy and an understanding of what's available, I want you to create a budget. I want you to set a goal, and I want that goal to be in relation to all of your other investing. One of the things that we see in the cryptocurrency space is that people that are not investing in anything else, and when I say other things or anything else, I'm talking about stocks, bonds, mutual funds, ETFs, real estate, commodities like gold and silver. Cryptocurrency isn't designed for it to be your only investment stream. It needs to be part of an overall portfolio. That's really important, especially in a volatile market, that you're not overloaded in one sector, let alone one type of instrument, because there are multiple sectors inside of the cryptocurrency space. Look at your overall portfolio, and if you're satisfied with where you're at and you want to take 10% of your current portfolio holdings and put it into a new asset class like cryptocurrency, which is a speculative market right now, that's not necessarily a bad thing. They always say that don't invest more than you're willing to lose. Well, I'm an investor and I don't want to lose anything. I'm willing to move with the ebbs and flows, but I don't go into an investment with the expectation or the thought of what it would be like to lose everything. I think that's the wrong thinking. The reason that statement is important, it's the psychological attachment that you have to the money that you put into an investment. If you put in money that you can't afford to invest, you're going to make bad decisions. It's going to move down 5%. You're going to get scared because that money is so important to you. Maybe you need to pay your bills, pay your mortgage, pay your rent, or you were planning a family vacation and you thought, you know what, I'll just invest this money now and it'll grow and I'll be able to have a better vacation. And then it falls by 20%. You panic and you're like, well, I at least got to save what I can save. And then the market goes up 30% the day after you sell it. That's the real truth behind this. It's the psychology, the psychological attachment that you have to that money. If you don't have that attachment, you will make smarter decisions. So separate yourself mentally from that money before you put it in. Now, I also said have a goal. Determine why you're investing. Now, the markets have been hot for short-term monetary gains, and that's kind of dried up with the volatility, unless you're going to go in and you're going to try to learn to be a trader. So think a little bit longer term. This is really an industry. If you truly believe that this is a transformational industry and there's transformational technology that you can invest in, and that those investments give you the right as an investor to some type of asset in the future, either through supply-demand economics or through equity acquisition, then invest in those projects for the potential at which they can deliver years from now, not just tomorrow. Set that goal that I'm going to invest X amount of my available capital, and that then I'm going to have a plan for when I want to use that money in the future. And that leads to step number 4, or rule number 4 for new investors, is have an exit strategy. Know where it is you're trying to go. I think one of the things that we noticed for people that were early adopters that say they got into Bitcoin at 2000, and then Bitcoin went all the way up to 19,000 and retracted back to 10. If you ask people, what was your exit strategy? And they're like, I don't have one. And then they sell at 8,000, it goes back up to 10. And then it goes back up to 25 sometime later that year. And it really was lack of a plan, lack of a strategy. The key to all investing is to know what you're investing for. If you're younger and you're investing for retirement, great, then don't even look at the shit until the year that you retire. Just let it sit. That's the type of investment this is right now. Now, that may change in a few years as blockchain becomes more of an adopted technology and these companies become more fluid from an earnings report perspective, and it becomes more of an equity investment play, which I'm all for the SEC's involvement in this industry and getting us to that point sooner rather than later. But without that exit strategy, you're really just throwing money at stuff and hoping for the best, but with no plan. Have a plan, have an exit strategy. The other important thing is that this is the last of the rules, rule number 5, is have a strategy for continued investment. All too often, people come into the cryptocurrency market and they think of it as an all-in play. They're looking for that one big win and they're willing to put all of their assets to play in one investment, which is never a good idea. And then they don't have an ongoing investing strategy. Most of them were looking for, hey, I'm going to get this revenue, or I'm going to get this income out of this, and I'm going to put it in that. But if you really think about how you plan for retirement, if you're using, say, a Roth IRA and you can put in $550 a month, you're putting in as much as you can each month, and you're building that month over month, the dollar cost average you're investing towards a potential goal. Roth IRA is retirement. Maybe you're doing it in a brokerage account for a house. Maybe you're doing it to save money for your kids' education. You have to do it on an ongoing basis to average out your investment costs over time. If you follow these rules, they're really going to help you to be successful. And if you're sitting here today watching this video as a potential new cryptocurrency investor, I want you to write these down, and I'm going to go over them real quick again in 1 second so that you can model out what it's going to look like for you to be involved in this market. So first off, get started. Open up an account. Fund it. Be ready to buy. 2, do some research and understand what the best investments are so that you can take advantage of them, and it can be within the comfort level of what you want to invest in. 3, set a budget and a goal. Know how much you're putting in and know why you're putting it in and what you want to do with it. That leads into number 4. Always have an exit. You don't go into a room if you don't know how to get out of it. So have an exit strategy and understand when that exit's going to be, or look for certain types of returns or volatility that you're looking for in order to get you what you want out of that investment. And then the last one, number 5, is build an ongoing investing strategy. Don't think of this as an all-in, one-time play. Really look at it as an opportunity to invest over time and dollar cost average your investing for a good return over time. So if you like this video, I encourage you to subscribe. We got a lot of great content that we're always putting out. And check out the link below for some other free training that we have in order to help you on your cryptocurrency investing path. Really appreciate every single one of you. Peace.